there, and welcome to the Property Wealth Podcast. Today, we're diving into a topic that a lot of you have been asking about, landlording.
Yeah, it's a big one, right? If you're thinking about becoming a landlord for the first time, it can feel a bit overwhelming, but it doesn't have to be.
Exactly. We're here to break it down for you. We'll cover the essentials, like how to find the right property, what to consider when setting rent, and even some tips for dealing with tenants.
And, it's not just about the properties themselves. It's also about building those relationships with your tenants. That can really make a difference in your experience as a landlord.
Absolutely. A good relationship can lead to less turnover and more stability. Plus, we'll share some common pitfalls to avoid so you don't have to learn everything the hard way.
Yeah, and I think it's important to remember that every landlord started somewhere. It's all part of the journey.
Right. And whether you're thinking about investing in a single-family home or a multi-unit property, we've got some practical tips that can help you feel more confident.
So, let's get into it. First up, let's talk about what to look for when choosing your first investment property. Sarah, the thing about landlording today is that it really hits home for a lot of folks, especially those of us over 40. When you think about retirement timelines, there's a sense of urgency, right?
Absolutely. It's like we can see the finish line, and we want to make sure we're set up well when we get there.
Exactly. I've talked to so many investors who are in that age group. And what they're realizing is that traditional retirement savings can feel a bit shaky right now. With inflation creeping up, it's hard to know if those savings will actually hold their value.
Right, and that uncertainty can be really stressful. I had a friend who's about to retire, and he's worried that what he has saved just won't cut it. He's thinking about buying a rental property to supplement his income.
That's a smart move. Real estate can provide a steady cash flow, which is crucial when you're on a fixed income. I remember working with a couple in their early 50s who bought a small duplex. They live in one unit and rent out the other. It's like they created their own little retirement fund.
That's brilliant. They're not just relying on savings. They're actively participating in building their wealth.
Exactly. And beyond the financial aspect, there's a peace of mind that comes with having that extra income. It's about feeling secure, knowing you have something that can provide for you when you need it most.
And speaking of security, there's also the emotional side of this. Owning property can feel empowering, right?
Oh, for sure. I've seen people transform through real estate investing. One client of mine, let's call her Jane, was really anxious about her financial future. She bought a rental property, and it changed her outlook completely. Suddenly, she felt like she was in control.
That's such a great example. It's like once you take that step, it can shift your whole mindset.
Definitely. And then there's the aspect of wealth transfer to family. Many people want to leave something behind for their kids or grandkids. Real estate can be a fantastic way to do that.
Yeah, it's a tangible asset that can appreciate over time. I know a few families who have held on to properties for generations.
Right, and those properties can provide not just financial security, but also a legacy. I had a client who inherited a family home and turned it into a rental. Now, that property is not just an income source, but also a way to keep family memories alive.
That's so meaningful. It's like you're creating a connection to the past while also securing the future.
Exactly. And in today's market, with shifting economic trends, there's also the potential for significant appreciation. Many areas are seeing a boom in housing demand, and being a landlord can really leverage that.
So it's not just about the immediate cash flow. It's also about the long-term growth, right?
Absolutely. We've seen cities grow and evolve. Just a few years ago, certain neighborhoods were considered undesirable, but today they're hotspots. Investing in the right place can yield incredible returns.
And with the current economic climate, it feels like people are more open to renting than ever before.
Yes, that's a huge factor. With rising home prices, many younger folks are opting to rent instead of buy. It's a shift that's creating a solid rental market for landlords.
It sounds like the demand is really there.
It is. And for someone over 40, this could be the perfect opportunity to jump in. You're not just investing in a property, you're investing in a lifestyle, a way to secure your future.
Right, and it gives you options. You can choose to sell later, hold on to the property, or even use it as a base for further investments.
Exactly. It's about building a portfolio that can adapt as your life changes. Maybe you want to travel more or downsize later. Having that rental income can give you the freedom to make those choices.
Yeah, it's all about flexibility, isn't it?
Yes, and I think that's why landlording is especially relevant right now. It's not just about making money, it's about creating a safety net, a plan for the future.
It's like planting a seed today for a better tomorrow.
Well said, and I think as we dive into core strategies, it'll become even clearer how to approach this journey.
Absolutely. Let's get into those strategies.
So let's dive into some of those core strategies and rules of thumb that can really help first-time landlords. Yeah.
Absolutely. I think a good starting point is the 1% rule. Can you explain that a bit?
Sure thing. The 1% rule is pretty simple. It suggests that the monthly rent you can charge for a property should be about 1% of the purchase price. So if you buy a property for, say, $200,000, you should aim to charge around $2,000 in rent per month.
That makes sense. But what if the numbers don't add up like that?
Good question. If the rent is significantly lower than that 1% benchmark, it might indicate that the property isn't a great investment. But, there are exceptions. Some markets have lower rents, but can still be solid investments due to appreciation potential or strong demand.
Right, and that leads us to the 50% rule, doesn't it?
Exactly. The 50% rule is another handy guideline. It states that about 50% of your rental income will go toward operating expenses. This includes things like property management, maintenance, taxes, and insurance.
So if you're expecting to make $2,000 per month in rent, you should budget around $1,000 for expenses?
Yep, that's spot on. It helps you keep a realistic view of your cash flow.
And what about capitalization rates or cap rates?
Cap rates are crucial for evaluating the profitability of an investment property. The cap rate is calculated by taking the net operating income, NOI, and dividing it by the property's purchase price.
So if a property generates $20,000 a year in NOI and costs $200,000, the cap rate would be
10%. You just divide 20,000 by 200,000, and you get 0.1, which is 10%. A higher cap rate typically indicates a better return, but it can also reflect higher risk.
Got it. And how do you determine if a cap rate is good or bad?
Well, that can vary by market. Generally, a cap rate of around 8% to 12% is considered good. But in a hot market, you might find lower cap rates. And that's okay if the property has strong appreciation potential.
That's really useful. So what's next, Mike?
After understanding those rules, you'll want to evaluate deals with a checklist. Look at the property's condition, location, and rental demand. Ask questions like, what's the neighborhood like? Or, are there schools and amenities nearby?
And maybe even consider future developments in the area?
Exactly. Upcoming infrastructure projects can really boost property values.
So in terms of financing, what options do new landlords have?
There are several paths. Traditional mortgages are common, but you might also explore FHA loans, which can allow for lower down payments. Then there are options like hard money loans, but those typically come with higher interest rates and shorter terms.
Right? And if someone's looking to scale their investments,
they might consider leveraging equity from existing properties. That way, they can purchase additional investment properties without having to come up with all the cash up front.
Smart move. And what about property types?
Single-family homes are often the go-to for first-time landlords, because they're easier to manage. But multifamily properties can offer better cash flow since you have multiple rental units.
Yeah, I've heard that can be a game changer for cash flow.
For sure. It's all about finding what fits your investment strategy and comfort level.
What about markets? How do you decide where to invest?
Look for markets with strong job growth, population increases, and affordable housing. Researching local trends and economic indicators can really pay off.
And tools like Zillow or local MLS can help with that, right?
Definitely. They can give you insights on rental prices, property values, and even neighborhood trends.
This is all super practical. But, what about the nitty-gritty of property management?
Well, if you're self-managing, set up a system for handling maintenance requests and rent collection. You'll want to be organized from the get-go.
And if someone decides to hire a property manager?
It's a good idea if you want to save time and stress. Just make sure to vet property management companies carefully. Check their fees, services, and reviews.
That makes sense. Okay, so let's talk about some common pitfalls.
Right, it's essential to be aware of those. One big mistake is underestimating the costs associated with being a landlord.
Like what?
Well, beyond mortgage payments, there are maintenance costs, potential vacancies, and even legal fees. It's crucial to budget for those.
And what about tenant screening?
Not doing thorough tenant screening can lead to issues down the line. Always check credit history, references, and past rental behavior.
That's so important. Anything else?
Yes, not having a clear lease agreement can be a big problem. It's essential to have a detailed lease that outlines the rules and responsibilities for both parties.
So feeling prepared is key.
Absolutely, preparation can really set you up for success in the long run.
I think our listeners have a solid foundation to start with, Mike.
I hope so. It's really about taking those first steps, being informed, and staying proactive.
Well, that's a wrap for this section. Let's transition into discussing those common pitfalls in more detail.
You know, Sarah, one of the biggest pitfalls I see first-time landlords fall into is over-leveraging. They get so excited about buying a property that they stretch their finances too thin.
Yeah, that makes sense. I mean, it's easy to get caught up in the moment. What happens when they do that?
Well, I've seen it where someone buys a property with a lower down payment, thinking they'll just rent it out and everything will be fine. But then unexpected costs pop up, or maybe the property doesn't rent as quickly as they expected. Suddenly, they're scrambling to cover their mortgage and expenses.
Right, and that can lead to a pretty stressful situation. Do you have an example of someone who faced that?
Sure. I had a client. Let's call him Tom. He bought a duplex with very little down, thinking he'd get great tenants in right away. But, you know, the local market shifted a bit. He ended up with a vacancy for 2 months. With the mortgage and other expenses piling up, he was in a tough spot.
Ouch. So what could he have done differently?
Well, if he'd done a thorough cash flow analysis beforehand, he would have realized he needed a buffer. Maybe consider having 3 to 6 months of expenses saved up before diving in. It's all about being prepared for those unexpected bumps in the road.
That's a great tip. And speaking of bumps, what about tenants? I imagine that can be a whole other headache.
Absolutely. Bad tenants can really derail your plans. I once knew a landlord, let's call her Lisa, who didn't screen her tenants properly. She was so eager to fill the vacancy that she skipped the background checks.
Oh no. What happened?
Well, Lisa ended up with a tenant who didn't pay rent for 3 months, and to make matters worse, they caused significant damage to the property. It cost her thousands in repairs and lost rent.
Yikes! So what's the key to avoiding that kind of situation?
Most important thing is to have a solid tenant screening process. Check their credit history, rental history, and income. You want to look for red flags, like inconsistent income or a history of evictions. It's better to wait a little longer for the right tenant than rush into a bad situation.
That makes a lot of sense. And I imagine ignoring cash flow is another common mistake?
Definitely. Many new landlords focus too much on the property's potential appreciation rather than the cash flow it generates. I had a friend who bought a property in a trendy area, thinking it would increase in value, but the rent didn't cover the mortgage.
So he was just hoping for appreciation without considering the day-to-day costs?
Exactly. He ended up having to sell the property at a loss because he couldn't keep up with the payments. It's crucial to look at cash flow first and foremost.
What advice would you give to someone trying to figure out their cash flow?
I'd suggest creating a detailed budget that includes all possible expenses, like property management fees, maintenance, insurance, and even unexpected repairs. And don't forget to factor in property taxes. They can really add up.
For sure. And what about timing the market? I know many people try to buy at just the right moment.
Timing the market can be tricky. I once had a client, let's say her name is Karen, who waited for what she thought was the perfect time to buy. She kept thinking prices would drop further. But then they shot up instead.
Wow, that must have been frustrating for her.
It really was. She missed out on several good investment opportunities. The truth is, it's hard to predict the market. If you find a solid property that fits your criteria, it's usually better to jump in, rather than trying to time it perfectly.
So it's about focusing on what you can control, right?
Exactly. Focus on the fundamentals of the property, its cash flow, and how it fits into your long-term investment strategy.
And hidden costs. I imagine those can sneak up on new landlords too?
Oh, for sure. A lot of first-time landlords underestimate things like maintenance costs, property taxes, and even utilities if they're covering them. I had a client, let's call him Dave, who bought a property thinking it was all set, but then the roof started leaking.
Oh no! That sounds like a nightmare.
It really was. He hadn't budgeted for that kind of repair, and it ended up costing him more than he anticipated. It's crucial to have a contingency fund for those unexpected costs.
So what kind of advice can you give someone to better prepare for hidden costs?
I'd recommend researching common repairs and maintenance costs for your specific area and type of property. And, consider setting aside about 10% of your rental income each month for repairs and maintenance. That way, you're not caught off guard.
Those are some solid tips, Mike. So looking back, what overarching strategy can someone take to avoid these pitfalls and still be successful?
The key is really to do your homework, be patient, and prepare for the unexpected. Create a solid plan, and don't rush into any decisions just because of excitement or pressure.
And if someone does find themselves in a tough spot, what steps can they take to recover?
First, assess the situation honestly. Identify what went wrong and why. Then, make a plan to address those issues, whether that's tightening your budget, improving your tenant screening, or even seeking advice from a mentor or real estate advisor.
That sounds like a constructive approach.
It really is. Remember, every investor faces challenges at some point. The important thing is to learn from those experiences and adapt, turning mistakes into valuable lessons.
Great advice, Mike. It sounds like preparation and learning from experiences are key to success in landlording.
Absolutely, Sarah. With the right mindset and approach, anyone can navigate the world of real estate investing successfully.
Well, that's a great note to wrap up on.
So now that we've covered the basics of landlording, let's dive into some practical next steps that our listeners can take, right?
Absolutely. I think the first thing to do is to get familiar with your local market. Apps like Zillow are a fantastic starting point. You can browse listings, get an idea of rental prices, and see what's available in your area.
Right, and while you're at it, don't forget about using Rentometer. It's a really handy tool for checking rental rates in your neighborhood. It gives you a solid idea of what people are charging for similar properties.
Yeah, that's super useful. And if you want to get a little deeper into analyzing deals, the BiggerPockets calculator is a game changer. You can plug in your numbers and see if a property makes sense financially.
Definitely. And for those who might want to take it a step further, Deal Check is another great app. It helps you analyze potential investment properties, and you can compare multiple properties side by side.
And, don't underestimate the power of your local MLS. If you can get access, it's an invaluable resource for seeing what's on the market, and you can often find properties before they even hit the larger sites.
Exactly. It's all about getting ahead of the competition. Also, I recommend setting a goal for yourself, like analyzing one deal per week. That way, you'll start to build your skills and confidence over time.
That sounds manageable. And how about connecting with others? Joining a local real estate meetup can be a great way to learn from others and share experiences.
Yes, networking is so important in this business. You can find mentors, ask questions, and even discover potential partnerships. Plus, it can really keep you motivated.
And speaking of motivation, there are some fantastic books and podcasts out there. Have you come across any that you'd recommend?
Absolutely. The book on rental property investing by Brandon Turner is a classic. It really breaks down the ins and outs of being a landlord.
I love that one. And for podcasts, BiggerPockets podcast is a must listen. They share real stories from investors at all levels, which can be super inspiring.
For sure. Another great one is the Real Estate Guys radio show. They cover a variety of topics and have some really insightful guests.
Oh, and let's not forget about developing good habits. Keeping a journal or tracking your progress can be really beneficial. It helps you reflect on what you've learned and where you want to go next.
Great point. It's all about starting small and building momentum. You don't have to have it all figured out at once. Just take that first step and keep moving forward.
Exactly. And a good habit to start is to set aside a specific time each week for real estate education, whether it's reading, listening to podcasts, or analyzing deals.
Yeah, and don't forget to celebrate those small wins. Whether it's finding a good deal or simply learning something new, acknowledging your progress can keep you motivated.
And remember, it's okay to ask for help when you need it. Whether it's a mentor, a friend, or even online forums, there's a whole community out there ready to support you.
Absolutely, Sarah. And as you begin this journey, keep in mind that every landlord started somewhere. You're not alone in this, and you have the power to build your wealth.
So those are some practical first steps. Now, let's bring this all together.
So, as we wrap up today's episode, it's really important to reflect on some of the key points we covered in our Landlording 101 First-Time Landlord Guide.
Absolutely. One of the first things we talked about was the importance of understanding your responsibilities as a landlord. You know, like knowing the laws and regulations that apply to your property and keeping your tenants happy.
Right, and then there's the significance of setting the right rent price. It's crucial to do your research. Yeah, so you're competitive, but also ensuring you're covering your expenses.
Yeah, and we also touched on the value of maintaining a good relationship with your tenants. Communication can really make a difference in how smoothly things run.
Exactly. And don't forget about having a solid lease agreement in place. It protects both you and your tenants, laying out expectations clearly from the start.
Definitely. Those agreements can save you a lot of headaches down the road. Now, when it comes to building wealth through real estate, it's all about taking those first steps, staying informed, and being proactive.
Yeah, just remember, it's a journey. Each property you manage is an opportunity to learn and grow your portfolio over time.
For sure. If you found value in today's episode, we'd love it if you could like, subscribe, and maybe even drop a comment with your biggest takeaway or any questions you might have.
And don't forget to share this with anyone over 40 who's looking to invest in property. You never know who might need that extra push to get started.
And next time, we'll dive into tenant screening, discussing red flags and best practices. You won't want to miss it.
So, until then, keep learning and investing.
Thanks for joining us today.
Take care, everyone.
Bye.